Hello dear traders, welcome to Insta TV. You're watching financial news with me, Anna Kasatkina. Another cut in the ECB's key interest rate is unavoidable. Today's macroeconomic statistics raises doubts over the eurozone's economic recovery. Indicators have been showing sluggish dynamic within a few weeks. This causes talks in the market that new stimulus measures may be taken to boost economic growth. Let us remind you that in early 2015, a program of quantitative easing had been implemented, and later it was extended by the ECB. European Central Bank's head Mario Draghi does not hint anymore, but practically lets the market know that the regulator is likely to revise stimulus steps at the March meeting. An inflation report released today dispelled doubts, confirming these actions are inevitable. Preliminary data unveiled that the annual inflation rate in the euro area sharply declined by 0.2% in February compared to January, when an increase of 0.3% was reported. Experts had forecasted also slump, but only by 0.1%. The core inflation indicator did not cheer investors either. The benchmark index, which excludes volatile prices for food, tobacco, alcohol and energy, rose by 0.7%, though analysts had expected a gain of 0.9%. This data is most likely to take the cake and push the ECB to applying additional stimuli. The regulator seeks to return to the threshold inflation level of 2%. Since November 2013, inflation has remained below 1%, indicating that new measures for stabilization of the region's economy can be applied in the near future.
Preliminary estimate of consumer inflation in the eurozone turned out to be much worse than expected. Prices not only stopped growing but also started declining, and Europe is heading toward deflation. Given such a situation, further easing of the ECB monetary policy should be anticipated. It would have a negative impact on the single European currency. The level of 1.0835 should be viewed as the nearest target for the euro-dollar pair.
A retail sales report has been released in Germany today. The data showed German consumers have begun to spend more money in the beginning of 2016 due to the low jobless rate. Retail sales rose by 0.1% in January compared to December, when the indicator accelerated by 0.6%. But on a yearly basis, the indicator fell drastically by 0.8% in January versus 2.5% growth seen in December. Now the market is waiting for the ECB meeting, which is due to take place on March the 10th and can end with a decision to stimulate the economy of the euro area. It will exert significant pressure on the national currency, which has already been under pressure against the main world's currency. However, the eurozone's economic indicators, which will be released this week, can support the single currency. If they are positive, they will help the euro to not fall against its major competitor. This was Daily Financial News on Insta TV. Thank you and goodbye.